Hello, fellow traders. Tis I, the Rumpled One, coming to you on Wednesday, April the 27th, the year's 2022. Let's talk trading. Master of One, Part 12 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, you wanted to finish up a story you started in part 11.
Yeah. I kind of ran out of time there yesterday, which is not unusual for us to do. Time just seems to fly by so quickly. But I was talking about an acquaintance of mine who, probably more than acquaintance, a friend. Let's be honest about it. And he had introduced me to you and your material, and basically the idea of how you like to go trade and how you develop systems, and you had said, and he introduced me to that paper that you put together, all you need to know about trading, or is that the correct title?
Yeah.
Okay, and so he introduced me to that, and I read it. This paper is only a page and a half long, not very long, very very simple, and basically you had said in that paper that price either does one of two things: it either goes up or it goes down. And I'm looking at this, someone who's been trading, not making money, not losing money, just kind of like what a lot of traders do, just up and down, up and down. Sometimes my account's up, sometimes my account's down, and just not really doing anything other than treading water. And I'm looking at this and saying, yeah, this is crazy nonsense. This is stupid, because I mean, every other expert that I listened to basically contradicted everything that he said in there, and it was one of those funny things where you had a realization, that Einstein moment of what's the definition of insanity. Doing the same thing over and over again and expecting a different result. And so I decided, you know what, I'm going to go pay attention to this. I'm going to look at this, see where where is he getting this nonsense from? And I'm sorry, Hero, but I'm calling your stuff nonsense right now. but where's this all coming from? So I started listening to some of your videos, and my biggest contention was, no, the market moves sideways. No, it doesn't just go up or down. And what I wasn't looking at was, with a lot of these gurus that are out there saying, well, that's just noise. And I realized by looking at this, and there was like a light bulb moment that went off. Hey, they're right. It is just noise if you're looking at a big picture, but there's lots of money that can be made on the noise. And that was the big thing. That was a big light bulb moment for me, because you sit there, and we've talked about this, Tiro, many times, where the range for the day may be 100 pips on a good day for the pound dollar anyway. Although that got blown out of the water this week. Yesterday was like 200, the day before was like 145 or something like that. If I recall, the day before that was over 200 on Friday, and today, here it is pretty early. Right now, it's about almost 9 o'clock Eastern Time, U.S., and we're already up to 75 pips. So we wouldn't surprise me if we go to another 100 pips, again today or more. But my point being is that, hey, yeah, there's 100 pips in the total range, but if you look at these candles and the way they move up and down, there's a whole lot more than 100 pips there on a day. There's several hundred pips with the up and down. Now, is there a way I can go and trade that up and down? And that's where the light bulb moment went off for me, and started thinking about some of the things that you were saying in terms of statistics. And I come from an engineering background, and coming from an engineering background, statistics mean something to me, because you can't build a bridge without statistics. You need to know, if you want to go build a bridge, you need to know, how much weight can a particular piece of steel, they won't call it that, they'll call it a member, is able to go and carry. And how do they know that? Well, what they do is they do all types of tests, put all the tests together and create statistics about it. And then they put a margin of error on top of that, and then they put a margin of growth, meaning, let's say, for instance, when they built the Brooklyn Bridge, they built it to be able to carry 4 times the weight that it was necessary to carry. Why? Because they started seeing improvements because of the Industrial Revolution and bigger vehicles coming, and that's what engineers do. I'm an engineer. Well, why don't I do the same thing with trading? Why aren't I looking at statistics and seeing if I can find an edge that way? So that was the big thing for me. My friend, unfortunately, and obviously I'm not going to call him out by name, not going to dox him here on a video, but even though he was so excited, about all of what you were saying, Kiro, what happened was he was there and he followed it for about 6 months. And what happened was his trading probably improved a little bit, but not a lot of it. And so he just moved on. And that's the story of it all, is that you want to do anything well, you need to master it, and you can't master something in a week. Don't expect to go and be able to master something in a week. Don't expect to master it in a month, or maybe even 6 months. It takes time. Now, some people catch on quicker than others just because of differences in personality, difference in, I don't want to call anybody, less smart or less intelligent, but let's face it, there are people who are more intelligent and can see things that are more clear. And by the way, sometimes the more intelligent people are the ones that have it more difficult, but there are just certain things in who we are as beings, and so some people will catch on quicker and others won't. Well, for me, it took me about 6 to 9 months to finally start really improving my trading after reading some of the stuff he was saying. And unfortunately, my buddy, he was in it for 6 months. He didn't see a dramatic improvement, and he moved on. And unfortunately, he still trades, and by trade, he's a dentist, so he does this kind of part-time. And he really hasn't improved, because all he does is every 6 months, he's not looking for the next Holy Grail. And reality is, there really isn't a Holy Grail out there. The reality is, you got to go and pick a method, become a master at that method, and learn how to trade it and know everything there is about it. There's, like, even with the methods that I use, there are days I say, you know what, I'm just not going to do that today. Today's just not a good day to do that. For instance, on the other hand, there are times when you say, I am going to do it. So if we look at the 5-minute chart for this hour, we see that big drop in there. Well, that big drop that occurred was at 10, 20, 30-something pips, almost 40 pips. What I did was, I have a rule, and the rule I have is don't try to catch a falling knife. And the idea is that if the price is dropping tremendously quick, don't jump into that trade, because just as quickly it can go in reverse on you, go back in the other direction. Well, today, because of the way the market was moving, I've invalidated that rule and said, no, that's not a rule I'm going to follow today, because of what I've seen today and how the market's moving. So in that big move down, I picked up, I want to say, probably about 20, 25 pips, but it wasn't in one trade. It was in multiple trades, because what I would do is jump into the trade. When I saw the market stop, I'd jump out. When I saw the market start to continue that fall, I'd jump in, grab that knife again, and take it down. That is not my normal way of doing things, but it is something that's in my tool chest, and I know how to do it, and I know how to do it, well, more importantly, I know how to recognize the market when it's susceptible to do that. And that's the thing that we have to go and master. We need to be able to look at the market, know it so well that we can see what the market's actually doing. And I know that's difficult because, I guess the best way to explain that for people who are parents and have kids, the reality is when you have kids, and especially when they're younger, you see them doing something, what the next words out of their mouth are going to be, whether it be a good thing or something that needs to be disciplined. You just know, your kids so well, you know what they're going to do. Well, you need to know the market that well. You need to master it to that extent.
Yeah, I just put up a blank chart with the M5 candles, and this is one of those things where you can look, if you look left and you see where price was basically in the launch pad and went all the way up to 2600 there. You notice it's a turn trade. So like you're saying, you see price falling, and then all of a sudden you get a red candle closes, then a green candle closes. So you can, take the high here, which is basically a rat reversal, and then say, okay, price is either going to go up from that line or it's going to go down. And then you decide where your stop would be and you take the trade. And the same thing just happened. You had this, let's see, 1, 2, 3, 4 bars ago or candles ago. You had it drop. Then you had a small green candle. You look at the high. The next candle was actually a doji. And then 1 bar ago, it broke that candle's high right there about, say, 25, 37, 38, and it's moved up since then. And, that's just one simple, observation that every trend, using that word that I don't believe in, is going to be, is going to start, uptrend will start with a red candle followed by a green candle. Everyone does that.
Yeah, I'll call it, instead of calling it a trend, especially when we're looking down at these lower time frames, call it a directional move.
Yeah.
That's what it is. It's moving in a particular direction, and that's, and you can take advantage of that. If you just even look at the last hour, or the current hour, you look at it moved down, from the open, it moved down what? Oh, good grief, 39 pips. And then from the bottom there, it right now from the bottom there, just using that method of what you're saying, it's moved up another 10 pips. So potentially you have close to 50 pips that you could pick up. Now, are you gonna get that type of movement every day? No, of course not. But it's a potential, and whereas the day so far we've only had a 75 pip range. So in this 1 hour, we've had 2/3 of that. But that's the advantage of trading, making trading that way. Now, of course, it's a lot more time consuming. It's also something that requires, what I talked about a day or two ago, or yesterday, I guess it was, this whole idea of focus, because you can't walk away. You can't walk away from it, especially when you're in a trade. Now, there are methods out there that if you don't like that doing that, and you don't have the attention span, or you just don't feel comfortable doing it, there are methods out there where you can just put the trade on, set your stop loss, set your TP, and just walk away and let the market do what you want to do. And you know what? You can make a lot of money with that. In fact, there are a lot of folks out there that say you make more money doing that because the emotion doesn't come in and take you out of the market too early. And there probably is some truth to that. Me, on the other hand, I don't particularly care with that. I'd rather go and babysit it and just take my baby pips as I can go.
Right. And by the way, like I said, the launch pad, it just launched from 40 to 52.9 this hour.
Right. And if you would have taken that turn trade that you were talking about when it was developing, the reality is, well, right now you'd be up like 14 pips, but you potentially could have been up 16 pips. And it's just like you said, it's an easy trade. Now, on the other hand, if you go back, 1, 2, 3, 4, 5 candles ago, you had a setup for a turn trade there, and it did go positive for a second, and then it plummeted down. Well, that's why you got to figure out what your risk appetite is, and if your risk appetite's pretty slim, well, you know what, you're going to take a small loss there. If it's pretty big, and so you put a 20 pip loss on that, well, right now on that particular trade, you'd be at break even, or you could have actually exited out with 5 or 6 pips if you got out the top of that, and then the reality is, especially, and here's one of the things that people do that I think really causes problems, is that they jump into a trade, and when they jump in with the maximum amount of gunpowder that they have. Whereas what I like to do is I'll go and jump in there, you went against me, I can let that run against me, but down there at the bottom, when I get another turn trade opportunity, I go in again, and because I didn't use all my gunpowder. And so what would have happened is I could have gotten out of my first trade with maybe 5 or 6, and on the second trade I could have come out with 16, and that's just, so maybe I'm trading at half my gunpowder.
Yeah.
So, but the thing,
And you know what? Half your gunpowder is the fastest 15 minutes in trading. So Fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.